The decline of Bed Bath & Beyond serves as a cautionary tale for many retail investors who are seeking to recreate the short squeeze scenario seen in stocks like AMC or GameStop. I personally leveraged my long position in AMC, as I recognized that the stock was undervalued due to restrictions imposed by the COVID-19 pandemic. I began investing in AMC in December 2020 and gradually built my position until its eventual squeeze in June 2021. Despite not being a guarantee, I still believe that the stock's price would fundamentally increase due to its financial position, which, while not optimal, was not catastrophic. To my delight, AMC did experience a healthy squeeze, yielding substantial profits for me. And I had calculated that the downside risk highly outweighed the potential benefit. And thus, I increased my investment at a 5x, which was life-changing for me. However, the case with Bed Bath & Beyond is very different. Its price has been in freefall since Ryan Cohen sold his entire stake in the company in the summer of 2022, pocketing nearly $70 million USD in profit and leaving retail investors holding the bag as usual. The price of BBBY reached its peak in early 2021 at around $35, but has since been plummeting towards zero. Observing comments on stock-related forums such as tumultuous or Reddit, it becomes evident that many retail investors lack adequate due diligence and harbor false hopes and delusion. It is very disheartening to see such a lack of wisdom and sound judgment among retail investors, who seem unable to make informed decisions based on basic fundamentals. Additionally, there are those who take advantage of these inexperienced or misled investors, such as Citadel and other big-time hedge funds. Profiting from the pumping and grifting of the BBBY stock is also something that YouTubers do, and this is quite a disgusting thing. I'm here to bring you the reality of the situation. In light of this situation, the logical move has been to short Bed Bath & Beyond, which I personally have done successfully. It is imperative that retail investors educate themselves and exercise caution in their investments to avoid falling victim to such scenarios in the future. In conclusion, the decline of Bed Bath & Beyond, it serves as a cautionary tale for many retail investors who are seeking to recreate short squeeze scenarios in a delusional manner, like those seen in AMC and GameStop, which in that scenario, the upside and downside risk of bankruptcy outweighed a short squeeze, which is not the case here. It is imperative that retail investors educate themselves and exercise caution in their investments to avoid falling victim to such scenarios in the future. I personally made a wise investment decision by shorting Bed Bath & Beyond and avoiding the false hopes and lack of due diligence seen among many retail investors. I hope this message will inspire others to make informed and cautious investment decisions. The stock price of Bed Bath & Beyond is currently exhibiting volatility in response to various market factors, including speculation and the highly delusional sentiment. Following recent comments from the Federal Reserve regarding inflation, which were positive, the pre-market price of Bed Bath & Beyond has seen an increase. However, this may lead to further entrapment of retail investors, as the eventual fate of Bed Bath & Beyond is likely to be delisting and going over to the OTC over-the-counter markets, on a decreasing trend towards a value of zero. So just because we have a temporary increase bounce of, say, up to $5, it's still heading to zero. Just because you have mass speculation does not mean that the stock is going to go up to $300 or whatever these delusional retail investors believe. I'm wishing you a wonderful, beautiful, calming, and a stress-free day filled with progress and success in a smooth and sophisticated manner.